To our stock in the spotlight today, Fortress Paper shares fell almost 40% last week after the company's third quarter earnings miss estimates. Fortress is our company in the spotlight. Joining us to discuss the challenges and opportunities in the future, we are joined by Chad Wesselnikoff, CEO of Fortress Paper. Chad, thank you so much for joining us this morning.
Thanks,
so let's address, before we get into the industry, let's address the stock performance. Down 40% last week, down 70% year to date. Is there a fundamental issue affecting your industry, or are we just in a cyclical downturn?
I think there's three major issues that we've been facing. One is the underlying commodity. Dissolving pulp, approximately 12 to 18 months ago, was as high as $2,600, $2,700 a ton. It's dropped now below $1,000 a ton. Most investors, ourselves included, have felt that sort of $1,000 floor would be the industry minimum. Quite a few of our competitors are operating at a loss once we're below 1,000. Several are shifting out now. So again, we don't think that's going to be long-term sustainable at these prices. So we expect a recovery. But again, there's been a lot of headwind there. Second major issue we faced is our core dissolving pulp mill, which is located in Thurso, Quebec, has had some ramp-up challenges. Investors, and including management ourselves, thought that the ramp-up might take 3 to 6 months. We're now about 9 months into the process, and we're making progress. We had a major shutdown in September, which impacted that third quarter. I don't think all the analysts had factored that in their numbers. Now that we're past that, we've been running closer to 95, 96%. So we're getting there. Still a little bit of work to do, but some progress being made. And the last issue we faced was our banknote mill in Switzerland. Due to the cost structure there, with the European crisis, everybody's flooding into Swiss francs. It's affected our exchange rate. About 80% of our costs are in Swiss francs, whereas most of our competition operate in the Eurozone. So with that, we are now a high-cost producer, unfortunately, for that product. And we've gone from 20% profit margins to sort of negative 10% just with the exchange rate. So unfortunately, that's probably not going to change in the short term, but we're looking at ways to, find ways to optimize that particular mill and squeeze costs out of it.
What is the end user for dissolving? When a lot of us think of pulp and paper, we think of the newsprint industry, and we think of that as an industry where you probably have declining global demand. But is this slightly different when we're talking dissolving pulp?
Yes, absolutely. If you look at Fortress Paper, and it's actually part of our core strategy, we look for contrarian type of investments, which brought us into forestry. And as you said, most of the forestry sector is going through tough times. Newsprint is just how much of a decline. But within every sector, forestry included, we have found some niche products that are growing at double-digit growth rates. Dissolving pulp is one of those. So we take the same tree, but we go through dramatically different processes, a lot more refining. We actually consider ourselves a biorefiner, or more of a chemical creator. We then take that, it typically ships over to China, and it's used to produce rayon or viscose. So it's a competitive product to cotton, but it has improved or better characteristics than cotton. So again, we're sort of taking an old legacy mill and turning it into a new revolutionary product.
Now talk to us about the supply and demand. We're seeing demand sort of weaken off, particularly in China, but I was also reading that there's excess supply in the market, and that's sort of affecting, companies like yours. What is your outlook on that, supply-demand tension going forward?
Yeah, there's been quite a lot of capacity that's been brought online or announced into dissolving pulp. As I mentioned, it ran up to $2,600, $2,700. The profit margins would be very, very attractive. So numerous entrants came into the market. Several of those have since been canceled. Some of the mills have swung back to paper pulp. The cost structure is much, much higher to make dissolving pulp. So we still feel we're going to be a low quartile producer. So at these current prices, and around $950, our estimate is probably at least a third or more of the industry is operating at a loss. So again, we expect that to recover. And most of these new entrants, or the competition that's coming in, are in the high-cost environments, such as China. Obviously, we normally would think that China is going to be a low-cost environment due to its labor and some of the other aspects there. But they don't have their own domestic wood supply. And wood is by far the largest input when making dissolving pulp. So their wood ship about $700 a ton. Just their variable costs, chemicals, et cetera, which is a global market that China has no particular advantage, are about $1,000 a ton. At our full run rate, we expect to have our cost structure in the mid to high $700 per ton delivered to China, whereas again, they just can't compete on our pricing.
You talked earlier about being a high-cost producer in one area because of the fact that you've got this significant operation in Switzerland, the strength of the Swiss currency. What do you do about that? Because that looks like the strength of the Swiss currency, problems with the euro, that looks like an ongoing situation.
No, absolutely. The only way that we can work our way out of this is to differentiate ourselves, find ways to create even higher margin products within the banknote industry. So a typical banknote, when you're selling in large volumes, can be about $10,000 a ton. a medium-sized banknote or medium security-featured banknote like the Euro or the Bank of Canada, you're into 20,000, 25,000 a ton. We have some new products that are $65,000 a ton or higher. So we just need to drive sales forward on that and really focus on where we have a competitive advantage.
And let's focus on some potential catalysts going forward. You do have a mill that you are planning to sell. The Landcart mill, investors are looking for that as a potential sale. What is your timeline for that, and then how accretive do you expect that to be to your operations?
That's the banknote mill we're referring to as our Landquart mill in Switzerland. And again, we are looking at all alternatives for that particular mill. The analysts are strongly recommending we sell it, so that's not management's dialogue or what we're indicating to the market.
Okay.
There's certain aspects of that. We could joint venture it. We could spin it off. We have a lot of opportunities, and we're constantly evaluating our strategic options at all times. But at this point, we want to continue to run that business. Again, try to optimize the product. But eventually we will have to make some tough decisions. So stay tuned, but it's probably going to be at least another year.
Okay.
I'm looking at an analyst note here, and they have an interesting phrase. They say, look, the return of investor confidence about your company will require a blue quarter. They say that's going to be challenging. How do you respond to that?
I have to say they're right on the money. We put forward projections and estimates. Analysts obviously took those and put them into their valuations. And the problem has been the ramp up at our Thurso mill has just taken longer and been more expensive than we had originally anticipated. So we do have to get out there, and that's why I've come on the show today and going on a road show the rest of this week to try to rebuild that investor confidence that the model is not broken. It's just a slight delay.
And so what are you expecting from China? Is China expected to resurge as a significant source of demand for you? Is that important for your business?
Yeah, China still continues to grow, even with their economy slowing a bit. Our particular product, which is the dissolving pulp demand side of things, is still growing at double digits. And the viscose producers that buy our product are expanding quite rapidly, probably 20% growth in terms of new construction, new viscose capacity, and they'll need products like ours to fill those machines.
All right. Thank you very much for your time this morning, Chad. That's our Chad Westlakoff.